In a turbulent climate marked by significant fluctuations in the cryptocurrency market, the recent trend of outflows from crypto exchange-traded products (ETPs) has captured the attention of investors and analysts alike. As the crypto landscape continues to evolve, understanding the implications of these outflows is crucial for navigating potential market shifts and assessing investor sentiment. Crypto ETPs, which allow traditional investors to gain exposure to digital assets without directly holding them, have experienced notable changes in their inflow and outflow dynamics. As defined, an outflow occurs when more money exits these products than enters them, signaling a selling trend among investors. This trend is particularly concerning given the recent statistics. In March 2025 alone, global crypto products witnessed a staggering $1.7 billion drained in a single week, contributing to a total of $6.4 billion in outflows over a 5-week period, marking the longest streak since records began in 2015. The causes of these outflows are multifaceted, driven by a combination of macroeconomic factors, regulatory developments, and shifts in market sentiment. Economic uncertainty, particularly concerning U.S. Federal Reserve policies and inflation data, often leads to heightened risk aversion among investors. Furthermore, security concerns, exemplified by the $1.5 billion hack at Bybit earlier this year, can exacerbate fears and prompt quick sell-offs. Institutional investor sentiment, which significantly influences market trends, has also played a pivotal role. As major financial institutions reassess their crypto allocations, often in response to profit-taking phases or adverse market conditions, outflows can escalate rapidly. The recent data indicates that Bitcoin ETPs are usually the first to experience these outflows, subsequently impacting other assets like Ethereum and leading to widespread market declines. The implications of prolonged outflow streaks are profound. Not only do they exert downward pressure on prices, often resulting in corrections of 20% or more, but they also diminish liquidity within the market. As total assets under management (AUM) shrinks, selling becomes increasingly difficult, amplifying price declines. This environment of negativity can rapidly extend from institutional investors to retail traders, halting bullish trends and undermining market confidence. Despite these challenges, the resilience of the crypto ETP market is noteworthy. In 2024, the sector saw record inflows of $44.2 billion, primarily driven by Bitcoin and Ethereum products. However, as 2025 unfolded, the landscape shifted dramatically, with significant outflows beginning in February. This reversal marked the end of a robust 19-week inflow streak, which had accumulated $29.4 billion in the wake of the U.S. elections. Looking ahead, the future of crypto ETPs remains cautiously optimistic. While substantial outflows can be disconcerting, they often serve as a corrective mechanism within the broader market cycle. Regulatory evolution, especially in the United States, shows promise, with supportive policies emerging under the current administration. Moreover, the continuous introduction of new ETP varieties, including those for Solana and XRP, suggests a sustained interest in diversifying investment offerings. As the market adapts to these fluctuations, it is clear that crypto ETPs will continue to play a significant role in shaping investor engagement with digital assets. The potential for increased inflows in innovative products indicates that despite the current volatility, the long-term outlook for crypto ETPs remains strong, paving the way for new opportunities as the landscape evolves. Investors and analysts alike will need to stay vigilant, monitoring ETP flow trends and market sentiment to navigate this dynamic and rapidly changing environment. In a significant move that underscores the ongoing volatility and evolving dynamics of the cryptocurrency market, MicroStrategy has made headlines by acquiring an additional 22048 Bitcoin BTC for a staggering $1.92 billion. This latest investment marks a pivotal moment for the company, which has been an ardent supporter of Bitcoin as a primary treasury reserve asset. The acquisition brings MicroStrategy's total Bitcoin holdings to approximately 152,333 BTC, valued at around $12 billion at current market prices. This bold strategy, however, comes amidst growing concerns about the sustainability of Bitcoin prices and broader market sentiments. As of April 1, 2025, Bitcoin is trading around $85,170, reflecting a marginal increase of 2.07% within the day. Despite this uptick, the market is rife with anxiety, largely fueled by a recent surge in demand for put options contracts that allow investors to sell Bitcoin at predetermined prices. A notable transaction on Deribit revealed that a trader had spent over $1 million on put options with a strike price of $70,000 set to expire on April 25. This bearish sentiment indicates a growing belief among investors that Bitcoin could face downward pressure in the near term, particularly in light of anticipated economic impacts from impending U.S. tariff announcements. The put option trade highlights a concerning trend. The market's preference for downside protection is becoming increasingly pronounced. According to data from Amber Data, put options are trading at a premium compared to calls, suggesting that investors are bracing for potential declines in Bitcoin's value. This bearish bias is further evidenced by the recent spike in put options, with strike prices ranging from $70,000 to $76,000, reflecting fears of a significant market correction. Market analysts speculate that the recent volatility may stem from broader macroeconomic factors, including potential tariffs from the U.S. government that could weigh heavily on risk assets like cryptocurrencies. The aggressive moves from the administration could disrupt market confidence, noted Tony Stewart, founder of Pelion Capital, highlighting the interconnectedness of traditional economic policies and the burgeoning crypto market. In parallel with MicroStrategy's aggressive Bitcoin acquisition strategy, other players in the market are also recalibrating their approaches. Companies like XY Finance are positioning themselves as key facilitators in the decentralized finance, DeFi, and metaverse sectors, aiming to create robust cross-chain aggregators that can enhance user experiences and streamline transactions in these rapidly evolving landscapes. Despite the optimism surrounding Bitcoin as a digital gold and a hedge against inflation, the current wave of bearish sentiment raises questions about the long-term viability of such investments. Critics argue that Bitcoin's value is being artificially propped up by institutional purchases, and that without a solid foundation of widespread adoption and regulatory clarity, a significant collapse could be looming. As the cryptocurrency landscape continues to evolve, the implications of these developments are likely to resonate throughout the industry. Investors, both institutional and retail, will need to navigate these turbulent waters with caution, balancing the allure of Bitcoin's potential against the backdrop of rising economic uncertainties. With the next few weeks poised to be crucial, all eyes will be on Bitcoin's performance in the face of impending macroeconomic announcements and market reactions. In summary, while MicroStrategy's latest purchase signals a strong belief in Bitcoin's future, the concurrent rise in bearish investor sentiment and significant options activity indicates that the cryptocurrency market remains a complex and unpredictable arena. As stakeholders prepare for potential volatility, the coming weeks will be pivotal in shaping the trajectory of Bitcoin and the broader cryptocurrency ecosystem. In a notable shift towards the burgeoning cryptocurrency sector, members of the Trump family are taking significant steps to establish their presence in the world of digital assets. Recently, Eric Trump and Donald Trump Jr. announced the launch of American Bitcoin, a new venture in partnership with Hut 8, a Florida-based Bitcoin mining company. This initiative seeks to position itself as a leader in efficient Bitcoin mining while simultaneously building a strategic reserve of the cryptocurrency. The announcement, made on March 31, 2025, highlights the Trump brothers' commitment to Bitcoin and their belief in its potential for economic growth. From the start, we've backed our conviction in Bitcoin personally and through our businesses, stated Donald Trump Jr. in a press release. He emphasized that while purchasing Bitcoin is important, mining it presents even greater opportunities. Their venture American Bitcoin aims to capitalize on these opportunities by focusing on mining with favorable economics. Hut 8 will maintain an 80% stake in the venture, with American Data Centers holding the remaining shares. The company will be led by Matt Prusak as CEO, with Eric Trump serving as Chief Strategy Officer. This venture is part of a broader trend of increased involvement by the Trump family in the cryptocurrency space. Just days before the announcement of American Bitcoin World Liberty Financial, a decentralized finance company backed by the Trumps, revealed plans to launch a stablecoin redeemable for the US dollar. The stablecoin, dubbed $1 will be backed by US government treasuries and dollar deposits, reinforcing the family's growing influence in the crypto market. The Trump family's foray into cryptocurrency is not entirely unexpected. In recent months, Donald Trump has openly supported the crypto industry, having previously launched meme coins associated with his name and advocating for the establishment of a strategic Bitcoin reserve through an executive order. This order underscores the administration's belief that creating a reserve could provide a significant advantage for the United States in an evolving financial landscape. Trump's initiatives reflect a desire to reshape the regulatory environment surrounding digital assets, calling for simple common-sense rules to facilitate innovation and investment in crypto technologies. However, the move towards Bitcoin mining has not been without controversy. The energy-intensive nature of cryptocurrency mining poses environmental concerns, as it requires substantial electricity and can produce significant noise pollution. Critics argue that the industry needs to be more sustainable, while proponents believe that advancements in technology could mitigate these issues. The Trump family's involvement in cryptocurrency comes at a time when the market is experiencing both volatility and growth. As traditional financial institutions begin to embrace digital assets, the strategic positioning of American Bitcoin and similar ventures could play a pivotal role in shaping the future of the industry. As the cryptocurrency landscape continues to evolve, the implications of these developments remain to be seen. With the Trump family's backing and the strategic moves they are making, it is clear that they are positioning themselves at the forefront of a financial revolution that could redefine how we perceive and interact with money in the coming years. The success of American Bitcoin and its associated projects will be closely watched, not only for their financial viability but also for their potential to influence broader discussions around cryptocurrency regulation and sustainability in the industry. As the cryptocurrency market grapples with a significant downturn, Ethereum ETH has emerged as a focal point of discussion among investors and analysts alike. After experiencing a staggering 45% drop in value this year alone, Ethereum's current price stands at $1,912.75, down from its highs just a year ago. With a market capitalization of approximately $229 billion, the question on many minds is whether this represents a golden opportunity to buy or a warning sign of further declines. Ethereum, distinguished as the first blockchain to incorporate smart contract functionality, has long held the position of the second largest cryptocurrency by market cap. However, it now faces formidable challenges that could hinder its path to recovery. The platform has been plagued by inefficiencies, most notably its limited transaction processing capability of only 15 to 20 transactions per second, coupled with fluctuating gas fees that can significantly affect user experience. While current average fees hover around 39 cents, they have previously spiked to over $10 during periods of high demand, frustrating users and developers alike. As Ethereum's transaction costs and speeds have come under scrutiny, competitors like Solana have capitalized on its shortcomings. Solana's blockchain is capable of processing over 4,000 transactions per second at an average fee of just $0.00025, a stark contrast to Ethereum's performance. The impact of this competition is evident. Ethereum's share of total value locked TVL and decentralized finance DeFi protocols has plummeted from 96% in late 2020 to just 53% today. This decline in dominance is particularly alarming, as Ethereum previously set the standard for blockchain-based applications. Amid these challenges, the Ethereum Foundation, which oversees the development and direction of the Ethereum ecosystem, has faced growing criticism for its slow response to pressing issues. Many community members have voiced their dissatisfaction with the organization's leadership and decision-making processes. In response, Ethereum co-founder Vitalik Buterin announced plans for a significant restructuring of the foundation's leadership. He aims to inject new talent into the organization, enhance its technical capabilities, and establish a proper board of directors. While this move could signal a positive shift, uncertainty remains regarding its effectiveness in reversing Ethereum's current trajectory. This downward trend is not a mere blip in the market, it reflects a longer-term decline. Over the past year, Ethereum has lost nearly 50% of its value, continuing a 3-year trend where it has shed over 45% of its worth. Comparatively, other cryptocurrencies like Bitcoin and Solana have demonstrated more resilience and growth during this same timeframe. Investors are weighing the potential for Ethereum's recovery against the backdrop of these stark performance contrasts. Recent events have further complicated Ethereum's outlook. Notably, a tweet by Eric Trump on February 4, which touted Ethereum as a buying opportunity, coincided with a sharp decline of 40% in the asset's price. Critics within the crypto community quickly pointed out that endorsements from high-profile figures like Trump do not necessarily correlate with sustainable market movements, emphasizing that genuine demand and utility will ultimately dictate price behavior. As Ethereum attempts to navigate these turbulent waters, the involvement of entities such as World Liberty Financial, linked to the Trump family and holding significant Ethereum assets, has raised questions about potential conflicts of interest. The scrutiny surrounding these connections adds another layer of complexity to an already volatile situation. As the cryptocurrency landscape evolves, Ethereum's ability to adapt and innovate will be crucial to its survival. Investors are advised to proceed with caution, considering the emerging alternatives that offer greater efficiency and lower costs. The future of Ethereum could hinge on the successful implementation of its leadership changes and technological upgrades, making it imperative for market watchers to stay attuned to developments in the Ethereum ecosystem. Whether this downturn signals a ripe opportunity for investment or a warning of deeper issues remains to be seen. But the coming months will undoubtedly be pivotal for Ethereum as it seeks to reclaim its status in the ever-competitive crypto market. In a significant move underscoring the evolving landscape of cryptocurrency regulation, Solana has announced the launch of its Policy Institute. This initiative aims to advocate for regulatory frameworks that support the growth and sustainability of the blockchain ecosystem. As the cryptocurrency market continues to mature, the establishment of such institutions reflects a growing recognition of the importance of regulatory clarity in fostering innovation and investor confidence. The launch of the Policy Institute comes at a time when regulatory scrutiny in the crypto space is intensifying. Solana, known for its high throughput and low transaction fees, has been a competitive player in decentralized finance DeFi. However, the recent dynamics within the crypto market have prompted the need for a more structured approach to regulation. Our goal is to engage with policymakers and stakeholders to create a conducive environment for innovation, said a spokesperson from Solana. This proactive approach is expected to align the interests of developers, users, and regulators, ultimately benefiting the entire blockchain ecosystem. In related news, Ethereum has recently reclaimed its position as the leading blockchain for decentralized exchange DEX trading volume, surpassing Solana for the first time in 6 months. According to data from Defilama, Ethereum recorded approximately $63 billion in trading volume for March 2025 compared to Solana's $51 billion. This shift highlights the competitive nature of the DeFi landscape, where trading volumes can fluctuate rapidly based on market sentiment and platform performance. Ethereum's resurgence can be attributed to robust trading activity on platforms like Uniswap, which alone facilitated over $30 billion in volume during the same period. In contrast, Solana has experienced a decline in trading on key platforms such as Radium and Pump.Fun, with the latter seeing its trading volume plummet from a peak of $7.75 billion in January to just $2.53 billion in March, a staggering 67% drop. Analysts suggest this downturn may be linked to a decrease in the rate at which new tokens graduate to higher market capitalizations on these platforms, resulting in diminished overall trading activity. Despite the challenges faced by Solana, its adaptability and innovation continue to position it as a formidable contender in the DeFi arena. As the market evolves, the introduction of Solana's Policy Institute could play a pivotal role in shaping the regulatory landscape, potentially attracting more institutional interest and paving the way for future growth. As the second quarter of 2025 unfolds, industry experts are closely watching both Ethereum and Solana. Ethereum's planned network upgrades, particularly the Pectra upgrade aimed at enhancing scalability, may further solidify its dominance in the DeFi space. Meanwhile, the crypto market's overall trajectory remains uncertain, with analysts speculating about the impact of emerging trends, including potential shifts in investor sentiment as cryptocurrencies like Bitcoin and Solana vie for market share. In conclusion, the establishment of Solana's Policy Institute and the recent fluctuations in DEX trading volumes underscore the dynamic nature of the cryptocurrency landscape. As regulatory frameworks develop and technological advancements continue to reshape the market, stakeholders across the board will be keenly observing the interplay between innovation and regulation. The coming months are likely to bring critical developments that could redefine the competitive landscape of cryptocurrency, particularly as both Ethereum and Solana seek to enhance their positions in an increasingly crowded marketplace.